Today is May 13th, 2026, and I need you to hold two facts in your head at the same time because they should not be able to coexist, and yet here we are. Fact 1. The Producer Price Index, which measures what businesses pay for goods before they pass the cost to you, rose 6% year-over-year in April, the highest wholesale inflation reading in more than 3 years, 6%, wholesale, on top of 3.8% consumer inflation already reported yesterday. This is not a blip, this is a pipeline. What businesses pay today becomes what you pay at the register in 30 to 90 days. Fact 2. The S&P 500 rose 0.58% to 7444.25, a new all-time record close. The Nasdaq added 1.2% to end at 26402.34, also a new record, new all-time highs. On the same day, wholesale inflation printed the worst number in 3 years, in the middle of an active war, with oil above $100. With a new Fed chair who hasn't even officially picked up the keys yet, on a day when the Iran ceasefire is being described by the president himself as on massive life support. The stock market has completely left the building, and today's story explains exactly why, and exactly what the bill looks like when it comes due. Let's start with the biggest story of the day that most people are watching with their jaw on the floor. Donald Trump just landed in Beijing. He is meeting President Xi Jinping in what is being called a high-stakes summit. The agenda includes bilateral trade, tariffs, and artificial intelligence. And in a move that sent immediate shockwaves through the chip sector, Nvidia CEO Jensen Huang joined Trump on the trip. Jensen Huang, on Air Force One, flying to China. That is not a footnote, that is a headline, because the single most valuable question in the semiconductor industry right now is whether Nvidia will be allowed to sell its most advanced AI chips into the Chinese market, a market it has been largely locked out of due to U.S. export restrictions. Huang's presence on the trip signaled to investors that there could be positive developments regarding Nvidia selling its AI chips in China. Nvidia shares closed higher by more than 2%. If the Trump-Xi summit produces any loosening of chip export restrictions, the financial impact is immediate, massive, and directly felt by anyone holding tech stocks, semiconductor ETFs, or broad index funds, where Nvidia is one of the largest weights. This is the meeting that Wall Street is watching more closely than any geopolitical event this year, including the Iran war. Now let's talk about the inflation numbers, because they deserve more attention than they got today. Wholesale prices surged in April as the Producer Price Index rose 6% year-over-year, largely due to higher energy costs caused by the Iran war. Treasury yields hit 2026 highs on the news. The 10-year rose to 4.473%, its highest point since July 2025. The 20-year and 30-year both eclipsed 5%, their highest points since May 2025. The 30-year Treasury at 5%. That is your mortgage market. That is your home loan. That is your refinancing window slamming shut harder than it already was. Every time a long-term Treasury yield rises, the mortgage rate tied to it rises with it. And at 5% on the 30-year, the housing market, which was already frozen for most working Americans, just got another layer of ice. A Federal Reserve official warned this morning that some policy tightening may be needed to ensure inflation returns durably to 2%. Boston Fed President Susan Collins said 5+ years of above-target inflation has reduced her patience for looking through another supply shock, and that a prolonged war with Iran would post greater long-lasting impacts for inflation. A Fed official used the words policy tightening in public, on the record, on a day when the market hit an all-time high. Policy tightening is central bank language for raising interest rates, which would mean taking rates from 3.5% to 3.75%, where they currently sit, and moving them higher. In a slowing economy, into a softening job market, on top of $100 oil, that is the stagflation trap closing its jaws. And the Iran situation today made everything worse. Iran has formally demanded war reparations, full sovereignty over the Strait of Hormuz, the release of frozen Iranian assets, and the lifting of all economic sanctions as conditions to end the war. Trump called this demand totally unacceptable and said the ceasefire is unbelievably weak and on massive life support. Full sovereignty over the Strait of Hormuz. Let that land. Iran is not asking for a ceasefire. Iran is asking for permanent, legally recognized control over the waterway through which 20% of the world's daily oil supply flows. This is not a negotiating position that gets split down the middle. This is a demand that has no diplomatic middle ground. And Trump calling it unacceptable while simultaneously being on a plane to Beijing tells you exactly how fragmented and chaotic global diplomacy looks right now. Shell CEO Wael Sawan warned today that the world may have produced 1 billion fewer barrels of oil because of the Iran war, and that the disruption could soon lead to oil shortages within weeks, not months. Weeks, not months. Weeks. The CEO of one of the world's largest energy companies is warning of oil shortages inside the next few weeks, and the stock market hit an all-time high today. These two things are happening simultaneously in the same universe. The Iran war has cost U.S. taxpayers $29 billion so far, according to the acting Pentagon comptroller. However, U.S. officials familiar with internal assessments suggest costs may have already reached nearly $50 billion, $29 billion officially, $50 billion internally. For a war that started 75 days ago, that is roughly $400 to $650 million per day in military spending being added to a national debt that just crossed $37 trillion. And it gets added automatically, every single day, without a vote, without a debate, without a line item most Americans will ever see. Now let's connect all of this to your money, because this is not a news recap, it is a financial roadmap. The market is at record highs today for one reason. Technology stocks outperformed the rest of the market as inflation fears weighed on retail and banking. Roughly 2/3 of the S&P 500 were lower during today's session. 2/3 of the market went down today. The index went up, because Nvidia went up 2%, because Jensen Huang is on a plane to Beijing, because AI chips might get sold in China. That is the entire bull case holding this market at all-time highs right now. One man, one meeting, one trade policy decision that has not even been made yet. Tomato prices soared 15% month over month for the second consecutive month. Fruit and vegetable prices rose 1.8% month over month. Beef prices jumped 2.7%. Electricity prices rose 2.1% in a single month. Tomatoes up 15% for 2 straight months, while the stock market hits all-time highs. This is the K-shaped economy in its purest, most visible form. The people whose financial lives live inside the stock market are winning. The people whose financial lives live inside the grocery store are losing. And both groups are looking at the same set of numbers and coming to completely opposite conclusions about the state of the economy. Here is the full picture as of tonight, May 13, 2026. Wholesale inflation just printed 6%. Consumer inflation is 3.8%. A Fed official used the words rate hike in public. The 30-year Treasury is above 5%. The Iran ceasefire is on life support with peace talks deadlocked over demands that have no realistic middle ground. Shell is warning of oil shortages within weeks. The war has cost $29 to $50 billion and is running at $400 to $650 million per day. The new Fed chair just got confirmed and inherits the worst inflation environment in 3 years on day one. Trump is in Beijing with Jensen Huang hoping a single summit redefines the AI chip trade, and the S&P 500 just closed at a new all-time high. One of these things is pricing the world correctly. The other is not. Do you think the Trump-Xi summit produces a real deal on AI chips that justifies the tech rally and carries markets through everything else? Or do you think the PPI at 6%, the oil shortage warning from Shell, and the deadlocked Iran negotiations are the story that matters, and the all-time high is just the last picture taken before everything changes? Drop it in the comments. Because today gave us more contradictions in 8 hours of trading than most years produce in a quarter. And the resolution of those contradictions is going to define where your money goes for the rest of 2026.